In today's video, I'm going to go through my DeFi and airdrop strategies for Coinbase's Base chain for June 2024. Base is one of the fastest growing chains in all of crypto, and because of its affiliation with Coinbase, it has a lot more potential. In today's video, I'm going to show you some strategies to take advantage of Base and its growth. Welcome back to Dynamo DeFi. My name is Patrick. As a reminder, nothing in this video is financial advice. This is purely intended to be used for educational purposes. Now let's get into it. To start, let's talk about the numbers behind Base and why exactly I'm using Base in June 2024. To start, like you may know, Base is Coinbase's Ethereum Layer 2 rollup. That means that it inherits some of the security properties of Ethereum. In this case, ETH is used to pay for transactions on the chain. However, it's ultimately built by a team at Coinbase, and Coinbase has committed itself to onboarding their tens of millions of users onto Base. They've already stated that at some point you'll be able to buy tokens on Base directly from your Coinbase wallet. By the way, if you want to learn more about DeFi strategies as well as how to research DeFi yourself, be sure to check out my newsletter, dynamodefi.substack.com. Send out awesome things like this, deep dives on everything you need to know about certain narratives, ecosystems, etc. Or sometimes I share great things like video series teaching you how to do research yourself. Here's one I did recently where it was 3 hours showing you how to research things on chain, how to do on-chain analysis, how to use DeFi Llama to its full extent, and more. So again, dynamodefi.substack.com, link in the description. And this has been reflected in a very strong growth pattern for Base to date. If you look at the largest Ethereum Layer 2s on L2Beat, you can see that Base is currently the third largest Layer 2 in terms of funds that have been deposited to it. And it's been around for less than a year at this point. And not only that, it's actually on the verge of flipping the second largest Layer 2, Optimism, or as it says OP mainnet here, to become the second largest Ethereum Layer 2 rollup. Currently, it has about a 16.2% market share. And if you look at the actual activity on chain, in this case measured as average transactions per second over the past day, you can see that currently Base is number one, processing around 31 transactions per second over the past day compared to 22 for Aerodrome and 13 for Ethereum. So it's significantly larger than these, although there are days where Aerodrome has more. And then if you look at the DeFi ecosystem on Base, you can see that it has been growing very consistently since Q1 of this year. Since the start of 2024, it's grown from around $444 million in Base DeFi to today $1.769 billion. So nearly a 4x increase in deposits on Base DeFi. And you can see this is just, even though it's slowed down a bit, it's still continuing to grow pretty consistently, hitting all-time highs every single month. And so because of that growth, there's going to be a lot more opportunities in the ecosystem. When new money is entering an ecosystem, it's always beneficial to people who are actually using applications, because it means that everything you do, you've got that boost from new money entering, right? If you're in an ecosystem, or if you've ever been in an ecosystem where money is leaving, it's kind of like being in a dying industry. There's just less money to go around, fewer opportunities, and everything is going to be so much harder. So it's much better to be in something like Base that is growing. So what we're going to look at today is we're going to look at applications that have good DeFi yields and applications that don't currently have tokens, but may in the future, and so that you can potentially earn an airdrop from. And in particular, I know a lot of people aren't as big fans of points anymore, but I am going to look at applications that have ongoing points programs, because that means that they're very, very likely to do an airdrop at some point. All right, so let's kick it off. To start, the largest application on Base with nearly half of Base's TVL is Aerodrome. Aerodrome is the leading decentralized exchange on Base, and Aerodrome has been flat for almost 2 months now. That being said, it is still the leading application on Base, and I think that the Aerodrome token, Aero, is to many people functioning as a proxy for a Base token, because since it's the leading decentralized exchange, activity that happens on Base is going to be closely mirrored by activity that happens on Aerodrome. And so I think that it's very likely that if Base does well, Aerodrome is probably going to follow that performance. And right now, the rewards on Aerodrome are still very lucrative. For example, if you provide liquidity on USDC and Aero, you can earn 110% APR. Now, keep in mind, that's because the Aero token is inflationary and you're receiving those rewards. But that yield is great. Or you can provide liquidity on ETH USDC and earn 26%. So if you're holding ETH anyways, you want to put it to work, you can do so on Aerodrome. They also have some other more complex strategies, such as concentrated liquidity. They have some strategies to involve different types of ETH, for example, CB ETH and wrapped ETH to earn 17%. And then, of course, they have ecosystem tokens for the Base ecosystem as well, which sometimes, in this case, has very good APRs. But remember the golden rule of yield farming. You always want to yield farm with tokens that you want to hold anyways. You don't want to buy something just because it has a good APR. And one protocol that works great in conjunction with Aerodrome, if you want to both farm yield and farm points, is Anzen. So Anzen is a real-world asset-backed stablecoin. Love that because real-world assets, I think, are going to be one of the premier narratives in crypto over the next few years. And even maybe this year, because you have people like the BlackRock CEO saying that he sees the future of finance moving to everything being tokenized. And real world asset basically means tokenized real world asset. And what Anzen does is they have a stablecoin USDZ that is backed by private credit loans. You can see here what RWA collateral is USDZ backed by. A diversified portfolio of institutional real world assets, primarily composed of asset-backed private credit securities, etc., etc. They don't have a token live yet, though. However, they do have a points program. So note, you will need a referral code to get access to this, unless you want to wait on the wait list, which there's thousands of people on. So here is my personal referral code. I will paste this in the description, or you can look at it right here. But yeah, you'll need that to access it. And the nice thing with this is you can either hold USDZ for a 5x multiplier, stake it, and if you stake it, you're going to earn 84% APY, pretty good, or a 1x multiplier. You can hold it on Base and earn 5x, or you can deposit it into the liquidity pool on Aerodrome and get a 20x multiplier. Now, one thing I want to note on this, new stable coins, especially new stable coins you're farming, not safe money, right? This money is still risk on because smart contract risk is real and new stable coins are still risky. That being said, I think this is pretty interesting because you're earning the 20x boost. I think that this is an intriguing proposition that may be a governance token that's worth farming. And if I actually go and I look at this liquidity pool, you're earning 61% APR. So in theory, this value of this should stay flat. Again, we know what happens with new stablecoins. It can be risky, but APR is pretty good. Since this is backed by real world assets, I would be surprised, it's not gonna, I'd be surprised if it went to 0, but it is still riskier than just holding USDC, for example. Next up, we have Extrafi, and what Extrafi is a leveraged yield farming platform on Base. And basically what that lets you do is it lets you deposit into pools on Aerodrome. However, you can do it with leverage, up to 4x leverage. And because of that, you can earn extra high APRs. So to show you an example of what that means, USDC Aero normally would be 206%, but you can lever it up, earn extra yield, and earn 669%. That being said, this carries significant extra risk because now you run the risk of being liquidated if the price moves too much. And so can only say, don't do this unless you really know what you're doing, you know how to manage your risk, you understand how to look for the correlation between different tokens, and you understand the time frame that you're doing it on. This app is still somewhat useful though, because you can just use it as a yield aggregator. But but for the most part, I'm not going to be using Extrafi. It's also been flat since April. And next up, we have Moonwell. So Moonwell is the leading lending protocol on Base. Lending made simple is their tagline. And Moonwell, actually, I think is pretty good. Moonwell's TVL has been going parabolic recently. Just look at this. Zoop. It's going up like that. Even if we convert it to ETH, then it's still been growing, although growing at a more modest pace. So part of that growth is due to the price of ETH going up. But I think this is good because it's actually got pretty decent rewards. So for example, Arrow, and I think this is number one thing on here. I like Arrow. Again, I think it's a proxy token for Base. They've got 40% APY on Arrow right now. And if you look at that market, look at the breakdown of that, most of that is actually from interest people are paying. And then smaller amount is from Well rewards. So I think Well is pretty interesting as a protocol and a way to earn some yield. All right, now let's get to some smaller protocols that have potential airdrops. And the two that I'm going to look at right now are Jojo Exchange, and I'm going to look at Avantis. Both of these are decentralized exchanges for trading perps. So you are trading with leverage on those exchanges. And if we look at their TVL, Avantis is relatively small with $7.6 million. And Jojo, on the other hand, is even smaller with $3.3 million. However, unlike Avantis, it is growing rapidly, up 61% in the past month. Also, Jojo, I will note, is available on 3 other chains: Aerodrome, BSC, and ZK Sync Era. Although, if you dive into it, you can see the vast majority of its TVL is in fact on Base. And both of these have potential airdrops, and both of them have ongoing points programs, which I think means that an airdrop is very likely. And the reason why I find those so interesting is that Perp DEXs are proven to be one of the most profitable niches in DeFi. If you look at the top fee generating protocols, Perp DEXs are consistently sitting around the top, and certainly they're one of the top fee generators compared to the amount of TVL they have. And there really isn't a big Perp DEX on Base yet. We see Synthetics V3 is the biggest, it's the 10th largest protocol with $28 million. But I don't think that's an insurmountable lead at all. And so Avantis, Jojo, both have potential if they're able to become the premier Perp DEX on Base. I mean, just think about once CoinBase onboards 1 million people to Base, and some of those people are going to want to trade with leverage. These things are just going to become money printers, or whichever one wins is going to become a money printer. And so I'm interested in earning their airdrops. Jojo has this interesting thing going on where it has the airdrop allocated over 12 weeks. Currently, it's in Epoch 7, which I guess is week 7. And participants share the pool based on their points calculated weekly. And the way it works is trading 10 USDC earns 1 point, and maintaining an average margin of 2 USDC in your perp account, 1000x account, or bot account also earns 1 point, or you can invite people. So Jojo, that's how you earn it, and it looks similar to your standard Perp DEX. Avantis also has it's a trading platform, and it also has a points program. So Avantis has XP right now, and they have liquidity points and they have trading points. And the way that Avantis works is $1 invested as an LP gives 1 point a day, but locking for 180 days gives you 5 points a day. So you can lock for extra. They also have trading points. So trading organically accrues trading points. They do have filters for wash trading. So if you're just trying to trade back and forth, they may catch that. But if you trade on there, you also earn points. Additionally, Avantis has some ongoing incentives that they launched a couple weeks ago that make this extra worthwhile. Each week, they're distributing 15,000 USDC based on trading volume. So it's kind of like rebates. Top 20 traders get hoodies. I guess if you're into that, I've got enough hoodies already. They've got some subset of of traders called Chads who get access to their trading lounge where they get boosted trading XP and priority support. So you got to be pretty good to get that. You probably know if you're that good, but if you're solid, you can get those things. Yeah, so there's some extra rewards right now if you want to try your hand at that trading competition. Reminder to learn more about DeFi strategies and how to do DeFi research yourself. Check out my newsletter, dynamodefi.substack.com. Every week I send out a strategy of the week in there, and so oftentimes I send out things weeks or months before I talk about it on the YouTube channel. And for more videos like this one, be sure to like and subscribe. Until next time, this is Dynamo DeFi.